Crypto's fugitive king, the rise and fall of Binance. In July 2017, a Chinese-Canadian programmer named Changpeng Zhao was sitting in a cramped Tokyo apartment, pecking away at his laptop with nothing but a vision and $11 million raised through an initial coin offering. Within 6 years, this same man would build Binance into the world's largest cryptocurrency exchange, processing over $65 billion in daily trading volume at its peak. But by November 2023, Zhao would find himself in handcuffs in a Seattle federal courthouse, pleading guilty to money laundering charges that would cost him 4 months in prison and a $4.3 billion fine. This is the story of how a middle-class immigrant built a crypto empire worth over $300 billion, only to watch it crumble under the weight of regulatory fury and his own hubris. Changpeng Zhao's path to crypto royalty began in the most unlikely of places. Born in China in 1977, his family fled to Canada when he was 12, settling in Vancouver where his father worked as a professor. Zhao, who preferred to go by CZ, studied computer science at McGill University and spent over a decade bouncing between traditional tech jobs at Bloomberg Fusion Systems and various startups. In 2013, during a poker game in Shanghai, a friend mentioned Bitcoin, and something clicked. CZ liquidated his apartment and went all in on cryptocurrency, joining blockchain.info as head of development before moving to OKCoin, one of China's largest crypto exchanges at the time. But it was his brief stint at cryptocurrency wallet company BG Wallet that gave him the technical foundation he'd need for what came next. By 2017, CZ had identified a massive gap in the market that existing exchanges like Coinbase, Kraken, and Bittrex were failing to fill, and he was ready to exploit it. The crypto landscape of 2017 was a wild west of opportunity and chaos. Existing exchanges were slow, expensive, and couldn't handle the surge of new users flooding into cryptocurrency as Bitcoin soared from under $1,000 to nearly $20,000 by year's end. CZ's vision for Binance was elegantly simple yet revolutionary: build the fastest, cheapest, and most user-friendly crypto exchange on the planet. Working 18-hour days from his Tokyo apartment with a team of developers scattered across Asia, CZ launched Binance in July 2017 with a promise to process 1.4 million orders per second and charge trading fees as low as 0.1%. The timing was perfect. Within 5 months, Binance had processed over $10 billion in trading volume, and by January 2018, it had become the world's largest cryptocurrency exchange by volume. The secret wasn't just technology, it was CZ's relentless focus on user experience and his willingness to list new cryptocurrencies faster than any competitor, often within days of their creation. As Binance's user base exploded from 0 to over 5 million in its first year,
CZ made a series of strategic decisions that would define both the company's meteoric rise and eventual downfall. Rather than establish headquarters in any single jurisdiction, Binance operated as a global nomadic entity, with CZ and his executive team constantly moving between crypto-friendly countries like Malta, Singapore, and the Cayman Islands. This jurisdictional arbitrage allowed Binance to avoid regulatory oversight while offering services that traditional exchanges couldn't, including high-leverage futures trading, margin lending, and access to thousands of cryptocurrency pairs that regulators in major markets had deemed too risky.
the company's native token, BNB, launched during their initial coin offering for 10 cents, would eventually reach an all-time high of over $600, making early investors millionaires and giving Binance a war chest worth tens of billions of dollars. By 2021, CZ's personal net worth had swollen to over $96 billion, making him one of the richest people on Earth and the undisputed king of cryptocurrency. But Binance's regulatory evasion strategy was built on quicksand, and by 2020, the ground was already shifting beneath CZ's feet. The company's practice of allowing users to trade with minimal identity verification, while popular with privacy-conscious crypto enthusiasts, made it a magnet for money launderers, sanctions evaders, and terrorist financiers. Internal documents later revealed by the Department of Justice showed that Binance executives, including CZ himself, were well aware that the platform was being used for illegal activities. In one 2019 message, CZ joked about the company's regulatory approach, saying, "We are operating in a gray zone, and it's always good to apologize and ask for permission later." Meanwhile, Binance was processing billions of dollars in transactions from Iranian users despite U.S. sanctions, facilitating trades for users in North Korea, and allowing customers to circumvent anti-money laundering controls by switching between Binance's various international entities. The company's own internal compliance team estimated that over 40% of Binance's revenue came from transactions that would be illegal under US law. The regulatory walls began closing in during 2021 as governments worldwide started coordinating their response to Binance's globe-hopping regulatory evasion. The UK's Financial Conduct Authority banned Binance from operating in Britain, calling the company's structure complex and high risk. Germany's financial regulator issued similar warnings, and Thailand ordered Binance to cease operations entirely. Most damaging was the investigation launched by the U.S. Department of Justice, which began subpoenaing Binance's records and interviewing current and former employees about the company's anti-money laundering practices. CZ's public response was characteristically defiant, tweeting that regulation is good for the crypto industry, while simultaneously relocating Binance's operations to avoid oversight. But privately, the pressure was mounting. The company spent over $100 million on legal fees in 2021 alone, and several major banks, including JP Morgan Chase and Bank of America, began blocking customer transactions to Binance. Trading volumes started declining as institutional investors fled to more compliant competitors like Coinbase and Kraken. The beginning of the end came in March 2023, when the Commodity Futures Trading Commission filed a lawsuit alleging that Binance had illegally offered derivatives trading to U.S. customers while helping them evade compliance controls. The lawsuit revealed devastating internal communications, including messages where CZ instructed employees to limit cooperation with U.S. investigations and discussed ways to remove American customers from Binance's systems without actually preventing them from trading. More damaging still were revelations about Binance's relationship with Sigma Chain, a trading firm secretly controlled by CZ that had been given privileged access to customer order flow, potentially allowing it to front-run trades and manipulate prices. As the lawsuit made headlines, Binance's daily trading volume plummeted from over $65 billion to under $10 billion, and several major institutional partners, including Visa and MasterCard, began distancing themselves from the exchange. The crypto world watched in shock as the industry's most powerful company began to crumble under regulatory pressure. CZ's empire finally collapsed on November 21, 2023, when he appeared in a Seattle federal courthouse to plead guilty to violating the Bank Secrecy Act. The plea agreement revealed the stunning scope of Binance's compliance failures. The company had processed over $9 billion in transactions involving U.S. users without proper anti-money laundering controls, facilitated over $800 million in trades with Iranian users in violation of sanctions, and allowed terrorist organizations including Hamas, Al-Qaeda, and ISIS to use the platform for fundraising. As part of the settlement, Binance agreed to pay a record-breaking $4.3 billion fine and submit to 3 years of federal monitoring. CZ personally forfeited $50 million and agreed to a lifetime ban from managing any cryptocurrency business. The man, who had once been worth nearly $100 billion, was sentenced to 4 months in federal prison, a remarkably lenient term that reflected his cooperation with investigators. In a brief statement to the court, CZ apologized for his poor decisions, but maintained that he had always intended to build a legitimate business. The aftermath of CZ's fall sent shockwaves throughout the cryptocurrency industry and marked the end of an era of regulatory lawlessness that had defined crypto's early years. Under new CEO Richard Tang, Binance began the painful process of rebuilding its compliance infrastructure, spending over $200 million on new anti-money laundering systems and hiring dozens of former government regulators to oversee its operations. The exchange's trading volumes remained depressed at around $15 billion daily, less than a quarter of its peak, as competitors like Coinbase gained market share by emphasizing regulatory compliance over innovation. Meanwhile, CZ served his sentence at a minimum security facility in California, reportedly spending his time reading and planning his next venture, though his lifetime ban from the crypto industry meant any new business would need to operate in traditional sectors. His personal wealth, while still substantial at an estimated $30 billion, thanks to his BNB holdings, had fallen by more than 60% from its peak as Binance's troubles weighed on the token's price. The rise and fall of Changpeng Zhao and Binance represents more than just another cautionary tale about regulatory compliance. It marks a fundamental shift in how the cryptocurrency industry operates and what investors expect from digital asset companies. CZ's early bet that innovation could outrun regulation paid off spectacularly for nearly 6 years, generating hundreds of billions in trading volume and making thousands of employees and investors wealthy beyond their wildest dreams. But his refusal to build sustainable compliance systems from the beginning ultimately destroyed the very empire he had worked so hard to create. Today's crypto entrepreneurs study Binance's trajectory as both inspiration and warning, understanding that while technical innovation remains crucial, long term success in digital assets requires the same boring fundamentals that govern traditional finance: proper compliance, transparent operations, and respect for the rule of law. CZ may have lost his crown, but his legacy as both crypto's greatest success story and its most spectacular failure will endure for generations of entrepreneurs who dream of building their own digital empires.